Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets. These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China raised its 2020 rare earth mining quota by 6.1% from the previous year to an annual record high of 140,000 tons, the Natural Resources Ministry said on Wednesday. This included a mining quota of 66,000 tons set in February. The ministry also granted 105,000 tons of tungsten concentrate mining output quota for 2020.
Moving on to the top news in the energy sector.
OPEC and allies such as Russia will ease record oil supply curbs from August as the global economy slowly recovers from the coronavirus pandemic, Saudi Energy Minister Prince Abdulaziz bin Salman said on Wednesday. The Organization of the Petroleum Exporting Countries and its allies, known as OPEC+, have been cutting output since May by 9.7 million barrels per day, or 10% of global supply, after the virus destroyed a third of global demand. After July, the record cuts are due to taper to 7.7 million barrels of oil per day until December. Prince Abdulaziz said effective cuts would be deeper due to compensation by countries which overproduced in previous months. OPEC Plus documents seen by Reuters showed that the cuts will ease to around 8.54 million barrels of oil per day in August and September following compensations by Iraq, Nigeria, Angola, Russia and Kazakhstan.
We will now look at the top news in the agricultural sector.
APK Inform Agriculture Consultancy revised up on Wednesday its forecast for Ukraine's grain exports in the 2020-21 July-June season to 50.6 million tons, from 48.9 million tons a month earlier. The consultancy also increased outlook for Ukrainian corn harvest to 36.6 million tons, from 35.4 million tons, and raised the commodity export estimate to 29 million tons from 28 million.
China booked fresh purchases of U.S. corn and soybeans amid rising concerns that the top buyer of American agricultural goods would slow its import pace after U.S. President Donald Trump signed an executive order ending preferential economic treatment for Hong Kong. The U.S. Department of Agriculture on Wednesday said that private exporters reported that China bought 389,000 tons of soybeans and 132,000 tons of corn for delivery in the 2020-21 marketing year that begins on September 1.
Next we have agricultural price moves.
Chicago soybeans rose for a second day on Wednesday as a decline in U.S. crop ratings kept attention on harvest risks while a latest export sale to China boosted demand sentiment. Corn was little changed, also underpinned by Midwest weather risks and Chinese demand but capped by ample inventories and uncertainty over the economic impact of a coronavirus epidemic. Wheat ticked higher as reduced production estimates for Northern Hemisphere harvest supported prices. The most active soybean futures on the Chicago Board of Trade were up 0.5% at $8.82 minus 1 quarter a bushel by 12:12 GMT. CBOT corn futures were down 0.5% at $3.33 minus 1 quarter a bushel. CBOT wheat were up 0.4% at $5.28 minus 3 quarters a bushel, as investors assessed a steady drop in estimates for this year's Russian harvest.
We will now take a look at energy price moves.
Oil prices steadied on Wednesday, supported by a sharp drop in U.S. inventories, but further gains were held in check as the Saudi oil minister said OPEC and allies may ease supply curbs from August as the global economy slowly recovers from the coronavirus pandemic. Brent crude was up 14 cents, or 0.3%, at $43.04 a barrel at 13:25 GMT, and U.S. West Texas Intermediate crude rose 13 cents, or 0.3%, to $40.42 a barrel. The Organization of the Petroleum Exporting Countries and its allies, known as OPEC+, have been cutting output since May by 9.7 million barrels per day, or 10% of global supply, after the virus destroyed a third of global demand.
Moving on to metal price moves.
copper prices steadied on Wednesday after earlier losses triggered by political tensions between the United States and China, ahead of Chinese manufacturing data that could shed light on demand prospects. Benchmark copper on the London Metal Exchange traded up 0.2% at $6,510 in official rings. Prices of the industrial metal touched a two-year high of $6,633 a ton on Monday, a gain of more than 50% since hitting four-year lows in March, as economic activity and demand slumped due to coronavirus lockdowns.
Finally, we have the most recent news on the financial market.
Risk sentiment revived in currency markets on Wednesday, as progress towards a COVID-19 vaccine helped equities rebound and commodity currencies strengthen, while the dollar fell to a one-month low. The U.S. company Moderna has produced an experimental COVID-19 vaccine that provoked immune responses in all 45 volunteers, sparking a risk-on mood. But there was still some cause for caution, with worsening U.S.-China tensions and fears about the economic impact of a second wave of coronavirus in the United States. Florida, which has become an epicenter of the new outbreak, reported 133 new COVID-19 fatalities on Tuesday, raising its death toll to more than 4,500. The dollar index fell below 96 for the first time since June, dropping to a one-month low of 95.866 around 0830 GMT. It then stabilized at 95.907 at 1045 GMT. The euro extended overnight gains to a four-month high of 1.14475 versus the dollar at around 1055 GMT, close to the euro-dollar's peak of 1.1495 in early March. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.